Hey guys, what is going on? Welcome to the video. So once again, we had a huge volatility in the stock market this week, which included both the largest red and the largest green days that we've seen in all of 2024. In this video, I'm going to be going over what played out this week and what caused the sell, go over what to expect next, including an important pattern to watch, as well as the top trade ideas that I'm watching in the week ahead. As always, there are timestamps in the description. Let's go ahead and get into it. So starting out by taking a look at the S&P futures chart. Futures started tanking Sunday night all the way into Monday morning, with the S&P down as much as 4.5%. This was the largest sell-off that the market has had since 2022, and this sell-off was due to recession fears as well as the carry trade. So for those unfamiliar, the carry trade was large institutions and traders taking advantage of the extremely low rates of the Japanese yen, which they were able to borrow for as low as 0.4% per year. These traders could then convert the yen into dollars, which they could earn 5% per year on due to the current rate environment. So it had essentially been free money on that arbitrage. So what happened though was the Bank of Japan raised rates for only the second time since 2007, and this led to many of these carry trades getting margin called and futures to tank. Dip buyers came in on Monday morning at 51.20 though, as the S&P had been extremely oversold. This rally made it back up to 53.38 on Tuesday afternoon, which is where the sell started on Sunday night and acted as the key pivot all of this week. It attempted to break out above it on Wednesday, which failed to hold, leading to a mini failed breakout and another sell. This time though, it found support at 51.80 to 52.08 zone and put in a higher low and was able to rally back up to 53.38, which it was able to break and close above to close the week. So into next week, the key downside pivots to watch are at 53.38, which if it fails back below there can start another pullback, and the key levels below there would be at 52.72 and then 51.80 to 52.08. There are some levels in between, but these are the biggest pivot levels that I would focus on. Failing below 51.80 to 52.08, which is where it successfully put in that higher low on Thursday, is the area that I would consider a must hold, as below there the market likely drops to new lows. And on the upside, 53.88 to 5400 is a key resistance, which above there can trigger upside towards the major zone at 54.33 to 54.53. So 54.33 to 54.53 was the bottom of the previous multi-week range, which triggered the start of this large breakdown that played out. If this zone is reclaimed above, there's a good chance that the pullback is over and the market can see large continuation higher. As long as it holds below that zone though, the breakdown is still intact and the larger market pullback stays in play. I don't have a strong opinion on how things play out from here, but I would have a slight bearish lean as long as below 54.33 to 54.53, though if it was to break and hold above there, that would switch to a pretty big bullish lean. And one bearish pattern to keep an eye on is this potential bear flag that is building out. I wouldn't put too much weight on this pattern just yet, but if it fails to break above that trendline resistance, this would develop into a more well-defined pattern and ultimately result in a break lower, potentially looking something like this if it plays out. Alright, so now getting some trade ideas for the week ahead, starting out with Tesla stock, ticker symbol TSLA. So we've been going over the setup on Tesla for weeks now. We've talked about how the 200 to 207 zone is the key pivot zone along with the 200-day moving average. And this week on the large gap down that started the week, it found support at 182, rallied right back up to the key zone as resistance, and spent the entire rest of the week consolidating just below there. It rejected almost exactly at the 200-day moving average 3 different days as well. So into next week, it's looking primed for another directional move soon. Sellers are currently in control of the trend as long as it holds below this zone, but if it is able to reclaim and hold back above it, it can produce a strong breakout move to the upside. Whichever direction the indexes move in the week ahead, I would expect Tesla to follow. So for longs, I'd be watching for a break and hold above the 200-day moving average, which is currently at 203.18, to enter on a break and hold above there. And breaking above it can then target 207, 215, and then the trend line at about 221 to 222. If the market sees downside in the week ahead, this makes a great risk-reward short as well, due to how well-defined the setup is. So to short, you'd be wanting to play with a stop loss slightly above the 200-day moving average at 203.18, which would be less than 2% risk on your position. And if it sees a strong rejection off this zone, it can then target 195, and then the key zone below there at 180 to 182.94 next below. Coinbase, ticker symbol COIN, is another setup that I'm watching closely in the week ahead. So on Monday's gap down this week, it bounced right off the key support at 161.8 and bounced all the way back to its key pivot zone at 200 to 207.1. Coincidentally, that's pretty much the same numbers as that key zone we just went over on Tesla. But this zone acted as the bottom of the range from late February up until this week, so over 5 months long, and then broke below it with that gap down on Monday, and following that it spent the rest of the week consolidating just below it. So this sets it up for a likely directional move soon off this key pivot zone. As of now, sellers are in control of the trend below 200, and depending on what the market and Bitcoin does next, This can be a short with a tight stop loss, where you'd want to play it slightly above $200 per share to keep that risk low. A break and hold back above 200 can also act as an upside trigger and can be on watch to enter long positions above there, of course with a tight stop loss back below 200. And the upside targets above there would be at 207.1 and then 225 to 228 next above there. In a very volatile market like we've had, well-defined setups like these we've gone over are great to focus on, as no matter which way they break, you can keep risk low on the position, and they're likely to produce a strong move either way. Mercado Libre, ticker symbol MELI, is another stock that we went over last week, and we talked about how it was starting to break out of its 3.5-year long wedge pattern. And this week, its big strength continued, with Monday's dip getting bought up immediately, which led to strong continuation higher from the breakout. This is the type of strength during market volatility that you see from market leaders, and all dips and pullbacks are entry opportunities for this, as they will likely end up moving much higher. Support levels to watch in the week ahead for a possible pullback entry are at 1800 to 1825, and then the backtest of the key trend lines, which is currently at 1746 to 1748 and 1730 to 1732 for the week ahead. As long as above there, the long-term breakout stays intact. And the next resistance level on the upside is at 1900, and above there can target 1957 to 1970, and then 2000 to 2020 before new all-time highs above there. So that is everything that I'm watching for in the week ahead. Thank you guys for watching. I will be out of town next week, so I'll be back 2 weeks from now and catch you then. And for anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, nightly watch lists, and answer any questions you have in there. I'll catch you guys next time. Good luck trading the week ahead, and peace out.